All right. Hey, everyone. Welcome back to EcoWealth Lab for another deep dive.
Yeah.
We are pumped to have you back with us today.
Super excited for this one.
As always, we're going to be diving deep into the world of crypto with all of you beautiful listeners out there.
Absolutely.
And as always, if you're enjoying these deep dives and you want more, we do have a ton more on the channel, so feel free to go back and check those out.
Yeah, definitely check them out.
We put out content all the time, and we think you'll really enjoy it.
For sure.
And if you are liking what you hear, go ahead and tap that like button, subscribe to the channel, and hit that notification bell
Yeah, hit that bell.
so you never miss an update.
All right.
All right, so as always, got to give our disclaimer really quick before we dive in.
Of course.
We are not financial advisors. This is just for informational purposes.
Always for informational purposes.
We are going to be providing our own analysis and opinions.
Absolutely.
And yeah, do your own research, form your own opinions.
Yeah,
That's how we all grow as investors.
that's the best part.
So yeah, today's mission is to take a look at what's going on in the crypto markets right now.
Yes.
There's been some volatility.
A little bit.
We're going to try to identify some signals that might indicate a recovery.
Yeah, love it.
And we're going to come up with a game plan for how we can navigate this landscape.
For sure.
And we're going to be pulling all this information from some recent analysis we've been looking at.
Sounds good.
So let's jump right in.
That's good.
So yeah, the crypto market's been pretty crazy recently.
Yeah, you can say that again?
What really jumps out at me, and what I think is super important to acknowledge right off the bat, is the sheer scale of the recent activity we've seen.
It's been pretty intense.
There was over $1 billion in liquidations in just 24 hours.
Yeah, that's a crazy stat. Over $1 billion just gone like that.
So maybe for listeners who aren't as familiar with liquidations, can you break that down a little bit for us?
Absolutely. So imagine you're using borrowed money to make a bigger bet in the market. This is called leverage. And if the price of your asset starts moving against you and hits a certain point, it triggers an automatic sell-off to cover that borrowed money.
Gotcha.
Now, when this happens to a lot of people at once, it creates a cascading effect, pushing prices down even further and triggering even more liquidations.
Oof. So it's kind of a domino effect.
Yeah, exactly. It can happen really fast and aggressively, too.
Sounds pretty brutal, like getting caught in a digital stampede.
Yeah, it can feel that way for sure.
But in the analysis that we've been looking at, they pointed out a potential silver lining here.
Ooh, I like silver linings.
Yeah, so they suggest that after such a massive flush out of these leveraged positions,
Okay.
it actually makes it harder to see another huge leg down.
Interesting, because...
Because it's like a lot of those shaky bets have already been forced out of the system.
I see. So it's kind of like a cleansing process.
Yeah, exactly. It's like the market's getting rid of the excess leverage,
Right.
which in theory should reduce the risk of further sharp declines.
That makes sense.
Now, we might still see some people selling their assets, just regular spot selling.
Yeah, it's always going to happen.
Whether it's out of panic or they need to free up funds.
Right.
But the main downward pressure at this point has likely already happened.
So the worst is probably behind us.
Potentially. Yeah, it's looking like that.
Fingers crossed.
So I guess the big question now is what sparked this whole chain reaction in the first place?
Yeah. What caused the market to freak out like that?
What were the catalysts that led to this dip?
Let's investigate.
Well, from the research we've done, it seems like there are a few factors at play.
Okay, lay it on me.
One of the main concerns seems to have been fear of a major downturn in the traditional stock market.
Oh, yeah, like a Black Monday 2.0.
Exactly. And when you have influential figures like Jim Cramer talking about a potential stock market crash,
Oh, yeah, he can move markets with a single tweet.
it definitely creates a ripple effect and it makes investors nervous.
For sure. Nobody wants to lose money.
So when that fear starts to creep in, it can trigger what's called a risk-off sentiment across all markets.
I mean,
It means investors become less willing to hold assets that are perceived as risky.
makes sense.
And crypto, unfortunately, often falls into that category.
Yeah, crypto's still the Wild West in a lot of people's minds.
So people start thinking, hey, if the stock market is going down, maybe I should reduce my exposure to crypto too, just in case.
It's like a flight to safety.
Yeah, exactly, like battening down the hatches before the storm hits.
Smart move.
And then on top of that, for our listeners in the U.S.,
Yeah.
there's another factor that always comes into play this time of year.
Oh, yeah, good old Uncle Sam wants his cut.
Taxes.
Taxes, always got to think about taxes.
Yep, with the tax deadline coming up on April 15th.
Right around the corner.
Anyone who made gains in 2024, whether it's stocks, real estate, or crypto,
Yeah.
they might need to sell some assets to cover their capital gains taxes.
It's a yearly ritual.
Yeah, it creates this added selling pressure, which can push prices down.
It's like everyone's doing their spring cleaning, but for their investment portfolios.
It's a good analogy.
I try.
Now, interestingly, some analysts are actually predicting a bit of a market bounce after tax season.
Really? How come?
Well, the idea is that once that tax-related selling pressure is gone,
Okay.
we could see new capital flowing back into the market.
That's good.
As we enter a new financial quarter, people might have fresh funds to allocate.
Ah, so it's like a refresh button for the markets.
Yeah, exactly, like a little bit of a reset.
I like it.
All right, so we've talked about the stock market jitters and the tax situation.
Yeah.
But there's another big elephant in the room we need to address.
Let's talk about it.
The ongoing trade tensions between China and the U.S.
Oh boy, that's always a fun topic.
And specifically, the potential for new tariffs.
Right.
So how did all of that play into this recent dip?
Well, the concerns around those retaliatory tariffs from China definitely added to the market's anxiety. But here's the thing, and this is super important. At the time of this analysis, these specific tariffs weren't actually in effect yet.
Oh, really?
Yeah, they were scheduled to potentially start around April 10th.
Oh.
So the market might have been reacting to the anticipation of those tariffs rather than their immediate impact.
So it's like a preemptive freakout.
Exactly, like bracing for a storm that might not even hit.
And that delay in implementation is interesting.
Why is that?
Well, it could suggest that there are still ongoing negotiations between China and the U.S.
Right.
The fact that they haven't pulled the trigger on those tariffs yet could indicate that they're still trying to work things out.
So let's hope so nobody wins in a trade war.
Agreed. So all this uncertainty and the fear of a potential escalation in the trade war, that can really trigger that sell now, ask questions later behavior.
Makes sense. When things are uncertain, people tend to play it safe.
Yeah, they'd rather reduce their exposure to risk until there's more clarity.
It's like taking some chips off the table until you see how the game's going to play out.
Smart strategy.
Got to protect your capital.
All right, so we've explored some of the key reasons behind this recent market dip.
Yeah, we've covered a lot of ground.
Now let's shift gears a bit and talk about the potential for a bounce.
Ooh, yeah, let's talk about the good stuff.
What are some of the factors that could contribute to a relief rally?
What's giving us hope?
Well, for starters, those ongoing negotiations between China and the U.S.
Right.
If we see any positive developments there, or even just a further postponement of those tariffs, that could inject some much-needed optimism back into the market.
For sure, any sign of progress is good news.
But as our analyst pointed out, a true resolution to these trade issues would be much better than just kicking the can down the road with a temporary delay.
A Band-Aid solution is not what we need. We need a real fix.
Agreed. A temporary fix might give the markets a short-term boost.
Right.
But addressing those underlying issues, that's what creates sustainable confidence in the long run.
It's like treating the disease, not just the symptoms.
Perfect analogy. And speaking of things to watch for, you mentioned a crucial piece of economic data that's coming out soon.
Oh, yeah, that's right. The CPI data.
The Consumer Price Index.
AKA inflation data.
And it's set to be released on Thursday, April 10th.
Big day.
Now, for anyone who's not familiar with CPI, can you break it down a bit?
Sure. So CPI basically tells us how much prices are changing for everyday goods and services.
Okay.
It's a measure of inflation.
Got it.
So it gives us a snapshot of the current state of inflation in the economy.
And why is this specific inflation data so important for crypto right now?
Well, because inflation plays a big role in influencing the Federal Reserve's monetary policy.
The Fed.
Exactly. If the official inflation data comes in lower than expected, it could signal that the Fed might have more wiggle room to consider lowering interest rates down the line.
Interesting. So lower inflation could potentially lead to lower interest rates.
Potentially, yeah. And historically, lower interest rates tend to be good for asset prices, including crypto.
Why is that?
Well, for one, it makes borrowing money cheaper, which can stimulate investment and economic growth.
Ah, I see.
And lower interest rates also tend to make riskier assets like crypto more attractive.
Because investors are looking for higher returns.
Exactly. They're willing to take on more risk when the cost of borrowing is lower.
So this CPI data could be a big market mover.
Oh, yeah, for sure. Everyone's going to be watching it closely.
Now, our analysts also mentioned this service called Trueflation.
Oh, yeah. Trueflation is pretty cool.
What is that?
So Trueflation is basically a real-time inflation tracker.
Really?
Yeah. They use a whole bunch of different data sources to try to get a more up-to-date picture of inflation compared to the official government reports, which can be a little bit delayed.
So it's like getting a sneak peek at the inflation numbers before they're officially released.
Exactly.
Yeah.
And their data for March was suggesting a pretty significant decrease in U.S. inflation.
Wow. So if that's accurate and the official CPI data reflects a similar drop,
Yeah.
that could be huge for the markets.
It could definitely shift sentiment in a positive direction.
Now, on top of that, our analysts also highlighted the recent drop in the 2-year U.S. Treasury yield.
Oh, yeah, that's another interesting signal.
Now, can you explain what the 2-year Treasury yield is and why it's relevant?
Sure. So the 2-year Treasury yield is basically the return you get for lending money to the U.S. government for 2 years.
Okay.
It's considered a benchmark for short-term interest rates.
Gotcha.
And the fact that it's been falling recently suggests that the market is anticipating the possibility of future interest rate cuts by the Fed.
So it's like the bond market is placing its bets on lower rates down the line.
Exactly. They're saying, we think the Fed's going to have to cut rates eventually.
That's fascinating.
It is, isn't it? The bond market often has a pretty good track record of predicting future Fed moves.
So we've got potential good news on the inflation front.
Yeah, things are looking up.
Which could lead to a more dovish Federal Reserve.
Dovish meaning?
Meaning they might be more inclined to lower interest rates. Which, as we discussed, could be very positive for the crypto market.
Bullish.
But our analyst also reminded us of Fed Chair Jerome Powell's previous statements.
Yeah.
Where he expressed caution due to those potential tariff-related inflation risks.
Right. He's worried that tariffs could push prices up.
So how does that factor into all of this?
Well, that's a great question. It's definitely something to keep in mind.
Okay.
Powell's concerns are valid tariffs. Tariffs could potentially lead to higher prices for consumers.
Right.
Which could offset some of the disinflationary pressures we're seeing elsewhere.
But if the overall inflation data continues to trend downwards, it might give the Fed enough confidence to ease up on interest rates, even if there are some price pressures from tariffs.
It's a balancing act for sure.
Absolutely. They have to weigh all the factors and make the best decision they can with the information they have.
And the upcoming CPI data could be a game changer.
Yeah, it could provide that missing piece of the puzzle.
Fingers crossed for a good number.
All right, so we've talked about the potential for a bounce, but let's flip the script for a second and consider the other side of the coin.
Okay, let's get a little bearish.
When should we start to get a little more cautious, maybe even entertain a bearish outlook?
What are the warning signs we should be looking for?
What are the red flags?
That's a crucial question for any investor to be asking themselves.
Agreed. So let's break it down.
Let's do it.
While the current volatility doesn't necessarily mean the end of the bull market,
Right.
there are definitely some key levels and time frames we need to keep an eye on.
Give us the details.
So for Bitcoin specifically, our analyst is watching the Bollinger Band moving average on the monthly chart.
Okay.
Which is currently sitting around $65,000, ideally staying above $70,000.
All right.
Now, for anyone who's not familiar with Bollinger Bands, they're basically a measure of volatility, and they can give us clues about potential support and resistance levels. So if Bitcoin were to break down below that monthly Bollinger Band, that could be a major warning sign that the longer-term uptrend is weakening.
A bearish signal.
Exactly. So that's definitely a level to watch closely.
Noted.
Now, what about altcoins have been taking a beating lately?
Yeah, they haven't been looking so hot.
So what are we watching for there?
Well, our analyst highlighted the Others Index, which tracks the total market cap of all cryptocurrencies, excluding Bitcoin and a few other major ones.
So it's like a broad measure of altcoin performance.
Exactly. And the critical level to watch there is the $180 billion market cap on the weekly chart.
Okay.
Now, we have seen brief dips or wicks below this level before.
Right.
But if we see a sustained drawdown below $180 billion, where the market cap stays below that level for a significant period on the weekly time frame, that would be concerning.
Why is that?
Well, it could suggest broader weakness in the altcoin market and potentially lower investor confidence.
So Bitcoin's monthly Bollinger Band and the altcoin weekly market cap.
Yeah, those are two big ones to keep an eye on.
Got it. Anything else?
Well, we also need to think about the time frame for this potential recovery.
Right.
Our analyst suggests that if we don't see a significant bounce back by the end of May, that would be another reason to potentially reconsider the overall bullish outlook.
So we've got a deadline.
Kind of. If the market can't rally by then, it might mean that the underlying issues are more persistent than we initially thought.
Makes sense.
We need to see some signs of life.
Now, it's interesting because our analyst also mentioned that some prominent traders are starting to express caution.
Really?
Yeah, some are even taking profits off the table.
That's never a good sign.
Well, Not necessarily.
What do you mean?
Well, it's always wise to pay attention to what experienced traders are doing.
Right.
It's important to remember that they might have different investment horizons and risk tolerances than the average investor.
Yeah, that's true. Everyone's got their own game plan.
And sometimes those traders taking profits can actually create opportunities for others to buy in at lower prices.
Interesting.
So it's not always a doom and gloom signal.
So it's like they're taking one for the team, so to speak.
Yeah. Yeah, our analyst actually used that phrase, taking one for the team.
Ah, I like that.
It's a funny way to put it, but it makes sense.
It does. It's a contrarian perspective, but it's worth considering.
Now, we can't talk about crypto without at least mentioning Ethereum.
Of course, the king of altcoins.
It's seen a pretty rough correction recently.
Yeah, it's been hit hard.
So what's the analysis looking like for ETH?
Well, despite the recent downturn, the analysis we're looking at suggests that Ethereum might have actually found a local bottom.
A bottom.
Yeah, and they see potential for a substantial recovery from these levels.
Interesting. How high do they think it could go?
Well, they're targeting a move back towards its weekly and monthly Bollinger Band moving averages.
Okay, so even with the recent volatility, there's still potential for a big bounce.
That's what the analysis suggests.
I like it. All right, so we've covered a lot of ground here.
Yeah, it's been a wild ride.
We've explored the reasons behind the recent market dip, we've talked about the potential for a bounce, and we've identified some key levels and timeframes to watch.
We've got a game plan.
So with all that in mind, what's our strategy? What should our listeners be doing right now?
Well, first and foremost, I think it's crucial to acknowledge that we're in a period of heightened uncertainty.
Yeah, especially leading up to that CPI data release.
Exactly.
Yeah.
We can expect continued volatility and price swings in the short term.
So what's the best way to navigate that?
Don't panic. Don't make any rash decisions based on those short-term price movements.
Easy to say, hard to do.
I know, but it's the best approach.
What should we be focusing on then?
Focus on those key levels we've discussed. Bitcoin's monthly Bollinger Band, the altcoin market cap on the weekly chart,
Okay.
and keep a close eye on those upcoming data releases, especially the CPI inflation numbers on April 10th.
That's going to be a big one.
Huge. It could give us some much-needed clarity on the market's direction.
So stay calm, monitor those key indicators, and wait for more information.
Exactly. Patience is key in these situations.
Now, our analyst even hinted at the possibility of going long after some of this uncertainty clears.
Oh, yeah, potentially around that CPI data release.
So maybe waiting for a bit more confirmation before making any big moves.
It's probably the most prudent approach right now.
Agreed. All right. This has been another fantastic deep dive.
I've learned a lot.
Me too. It's incredible how many different factors can influence the crypto market.
It's like a giant puzzle with all these interconnected pieces.
From global economics to geopolitics to even investor psychology.
It's all connected.
And that's what makes it so fascinating.
And challenging.
Absolutely. Navigating this market effectively requires a constant commitment to learning and adapting.
Staying ahead of the curve.
Exactly. And on that note, here's a thought for all of you listening.
Hit us with it.
Consider how those real-time economic indicators and global events like those trade negotiations we talked about, how they can offer valuable clues about potential shifts in the crypto landscape.
It's like connecting the dots.
Understanding those broader forces can really empower your decision-making.
And help you see the bigger picture.
It's about going beyond just looking at price charts.
It's about understanding the why behind the price movements.
Exactly. All right, so if you enjoyed this deep dive and you want to see more content like this,
hit that like button.
And subscribe to EcoWealth Lab.
And don't forget to ring that notification bell
so you never miss an update.
We'll catch you in the next one.
Thanks for diving deep with us.
See ya.